that time again when we go around the world of business in 55 minutes. Welcome to Business Incorporated. On the program today, it's some good news and relief for Nigerians as we notice the price of rice is reducing in some parts of the country, and that in spite of the surging food inflation. And Kenya is not so good because we see the shilling dropping, and this is the first drop in 2 days. An investment corridor is open in Egypt. The corridor link deposit open to all. Good afternoon. Welcome to the program. I'm Ini John Mekop. We started from the global space. Oil prices slipped for the third straight session on Wednesday as likely higher U.S. commercial inventories weighed, while weaker economic data from China and dim prospect of interest rate cuts stoked worries about global demand. Brent futures for June were down 21 cents, that's about 0.2% to $89.81 a barrel. U.S. crude futures for May also went down 19 cents, that's about 0.2% to $85.17 a barrel. Oil prices have softened so far this week as economic headwinds curb gains from geopolitical tensions, with markets eyeing how Israel might respond to Iran's weekend attack. Analysts do not expect Iran's unprecedented missile and drone strike on Israel to prompt dramatic sanctions on Iran's oil export from the United States. Top U.S. Federal Reserve officials, including Chair Jerome Powell, backed away on Tuesday from providing any guidance on when interest rates may be cut, dashing investors' hopes for meaningful reductions in borrowing costs this year. Britain's inflation rate has come out and is slow, but by less than expected in March, signaling that a first rate cut by the Bank of England could also be further off than previously thought. However, inflation slowed across Eurozone last month, reinforcing expectations for European Union central bank rate cuts in June. Still in the global space now, gold prices were steady on Wednesday after rallying to record highs last week as safe haven demand fueled by geopolitical risks in the Middle East partially offset pressure from higher US dollar and treasury yields. Spot gold held its ground at $2,381.68 per ounce after hitting an all-time high of $2,431.29 on Friday. U.S. gold futures fell 0.4% to $2,397.70. The dollar held steady near a 5-month peak, making the greenback price bullion less attractive for other currency holders. Benchmark U.S. 10-year Treasury yields were at 4,651, hovering near a 5-month high that it hit in the previous session. Spot silver rose 0.3% to $28.16 per ounce. Platinum fell 0.3% to $953.75. Palladium was up 0.4% at $1,017.58 per ounce. We come to Nigeria. We've been celebrating the Naira for about a month now. The Naira has recorded its first decline against the dollar as the local currency depreciated by 1.1% to 1,148 Naira 14 kobo against the dollar at the Nigerian Autonomous Foreign Exchange Market. Well, this is attributed to the drop in the country's external buffer to the CBN, renewed sales of dollars to bureau de change operators to meet the demand by legitimate users. Analyst says that the decline of the Naira comes after 3 consecutive weeks of gains, may be connected to that report about the drop in the reserve, which has been placed at the lowest level since 2017. At $32.29 billion. It's a mixture of good and not so good news. So that was the not so good one. Now, the good one is going to the commodity market, looking at rice, which is a staple food in the country. A 50-kilogram bag of rice that is parboiled locally in Abuja now, we've seen the price decrease by 19%, about 19%, to 68,000 from 84,000 it was sold in February. This development comes amidst the soaring price of food prices, and we saw, of course, that food inflation hit 40% in the month of March. In other parts of the country, we see a 50-kilogram bag of rice locally parboiled in Abuja. That's the 68,000 naira. In Lagos, different ranges from 65,000 naira. In Edo State, 50 kg goes between 70,000 naira and 85,000 naira. In Kano, it's about 65,000 and 70,000 naira, depending on if it is local or imported. And it's important to know that this development comes amidst the soaring price of food. And we saw food inflation at 40% for the month of March. Now, yesterday we had that news that President Bola Tinubu launched a National Single Window Initiative, a transformative project that will propel the nation's economy to new heights. The initiative is another bold testament of the president's commitment to long-standing development, to breaking developmental barriers in advancing the progress, prosperity, and well-being of Nigerians. Of course, it does have a lot of promises, and so we have Dr. Muda Yusuf, the Chief Executive Officer of CPPE, telling us some of those benefits and expectations from this single window platform.
I've been on this concept of single window for close to 10 years. But for some reasons, we couldn't find the political will to drive it. And the reason being that there are elements within the ecosystem that are benefiting from the status quo, who have been frustrating, this whole idea of single window. Because it's not as if they are doing anything against the law. Okay. But when you have a process that is highly bureaucratic, that gives people opportunities for physical interaction, that also gives so much room for discretion, that's a fertile ground for corruption, extortion, and delays, inefficiency, which is also affecting the cost of goods and services. Because when we talk about this inflation, high cost of goods, high cost of living, a good component of it is also coming from the international trade system. So what is being done now is to leverage technology to bring efficiency into the whole process.
So that's it, of course, the implementation, according to Dr. Yusuf. It's not a new one, but of course the implementation of it is what might be new, and we hopefully will see it. Now let's move to the insurance sector. When you go to the stock exchange, the market, we see that most of the time insurance stocks are being seen as penny stocks, although we've seen a lot of movement around there. Now, Augustus and Co., they did carry out a performance measure of the insurance sector for 2023, and they found, well, there are some good news. The Nigerian insurance, the gross premium income exceeded the 1 trillion naira mark for full year of 2023. They also found that the industry has maintained its double-digit growth trend, and even though there were disruptions, so of course we had election and policy and some of those policy reforms, and then but insurance penetration is still really low at 0.4%. Well, let's talk to an individual representing that company, that's Augustus and Co., and they carried out these findings. To join us now, we have the head of financial institution with Augustus and Co., Mr. Ayokunle Olubumi, joins us from Lagos. Hi, Mr. Ayokunle, thank you so much for your time. Good afternoon.
Good afternoon. Thank you for having me.
Great. So I think the most obvious question here would be, how did the insurance industry survive the turbulence of 2023 to maintain a double-digit growth trend?
Thank you very much. I think a lot of factors actually even turn out positive for the industry. The first of all is that if you recall, in December the regulator increased the premium on motor insurance for third party from 5,000 to 15,000 and for comprehensive insurance to a minimum of 5%. So that helped the industry. Let's also not forget that we had massive devaluation of the currency last year, specifically about 50%, right, devaluation of the currency. So businesses and premiums that were foreign currency denominated, particularly in the energy business and even the aviation business, right, you realize that the naira value of those policies, those premiums that were paid were actually bloated. So that supported that particular industry. Recall also that we've also have significant inflation and the value of assets have actually gone up significantly. And also, given that the premium that are paid is a function of the valuation of assets, you will also see that the premium that were paid by the insured for those assets also increased significantly. Aside from that, there were significant marketing initiatives and distribution initiatives by the industry. A lot of them embraced more digital channels. A lot of them collaborated more with banks and insurance companies, banks and asset management companies to be able to distribute their products.
Yeah, the first three reasons you gave just makes me feel that there was not a real growth in the industry, but it was because of, as you noted, the value of the naira, an increase in premium. That just boosted the numbers, but not that there were more engagement, from the insured or from members of the public to the insurance company.
Okay. Yeah, also, I agree with you to an extent. I agree that what you see is that if you look at the real growth, the number of people that actually even bring in you realize that there were growth, but it wasn't that massive. Because another area that I've not touched on has to do with the rising popularity of micro insurance and also takafo insurance. So what is micro insurance? Micro insurance has to do more with insuring of low valued assets, right? And if you notice that since 2018, the industry has been trying to push out these initiatives. Particularly last year, 3 new micro insurance companies were actually listed. So that has even helped in even bringing some people into that particular bucket, to even bring some people that initially are not insured into that particular bucket. Ditto for takafo insurance, which is basically insurance that is based on Sharia principles. Because before, you notice that some people or some of Nigerians of the Islamic faith, they believe that insurance that you have does not agree with their faith. Right. With now the popularity of takafo insurance, they realize that they can actually even go into that. So in summary, you also notice that, yes, I agree with you that, look, if you compare the growth that you had in premium compared to the new people that you're bringing on board, right, it seems to be different. But notwithstanding, right, more people were also even brought into that particular bucket.
Yeah, but penetration is still really low at 0.4% for a population of about 200 million. And if you talk to a lot of Nigerians, even, the third-party insurance, a lot of people just do it because it's part of the requirement for you to have your car on the road, or else you'll be harassed and things like that. So I think it gets back to the issue of trust and the process for refunds, when incidents happen.
I agree with you totally, right? And even now, the truth is that a lot of Nigerians are not aware about insurance. In terms of knowledge about insurance, how insurance works, what is covered and what is not covered, a lot of Nigerians are actually not aware about it, right? Some people, what they believe are covered, are actually not covered. Some people don't even understand the process of even getting claims. Some even don't even understand that the insurance company needs to even be sure to even carry out tests and be sure that what you are claiming is actually what was insured. So I agree with you, a lot of sensitization, a lot of right. And Nigerians also need to be aware that, look, if the insurance company is asking you for questions, they just want to verify that what you actually claiming is right. Right. It's not only, they are not saying that, they are not going to actually even pay. So I agree with you, there are a lot of sensitization, a lot of awareness needs to actually even be made. And if you look at what the regulator have been doing, Nikon, you will see that Nikon is also even taking that initiative, particularly in the area with low insurance penetration, to educate them about insurance, for them to understand the process, what it entails, right? And I think Nikon has also even opened their window, such that if any Nigerian have if you have any complaint about your insurance policy, about how you're treated by your insurance company, you can actually even report directly to the regulator.
And I guess that penetration will be easier if a specific attention is given to the informal sector. You know, I know you mentioned some of those policies that are supposed to be created for the lower cadre and all of that, but I think the drive towards that will largely increase the penetration percentage.
Yeah, it's true. But also, let's also not forget the kind of headwinds, the kind of economic environment we're operating in now. Things are relatively tight now. And you also agree with me that in period of macroeconomic headwinds, those are the lower bottom that are significantly affected, right? So everybody is being careful about your disposable income, what you're actually even expending on. Because if you check what the micro insurance people have done, they've actually done significantly well. And back to your point, the regulator also had this at the back of their mind. If you notice, in 2020, all insurance companies are even allowed to even have micro insurance window. So apart from your normal policies, you can have a window in which you can actually even try that particular policy. I agree with you that they need to also do that, but we should not also forget the economic cycle, what they are actually even going through, because disposable income of consumers have actually even reduced significantly.
So with this now, what can we expect in 2024 with this, hit on disposable income?
Yeah, I think the industry will still fare better, right, in 2024, because what we are also seeing now, right, we also play into the performance last year, is that the industry is being careful. They want to ensure that, look, whatever risk you are undertaking, whatever risk you are writing, they are appropriately priced. Because what we've seen prior to last year is that, look, risks were not appropriately priced, such that you see that some policies, right, you see that they're actually loss-making, right? So, like I mentioned, the intervention of NIPON, also the Reinsurance Association of Nigeria, PRAN, right, they've also even talked about that in terms of fire policies. So, in terms of pricing of policies, the industry will actually ensure that the risk are actually appropriately priced. Then also in some sectors, activities are picking up. For instance, in the oil and gas space, right, we could say that, look, activity is actually picking up. If you look at the rig counts in Nigeria now, it's increased to like 19 in March from about 14 that we had as at December, right? So that one is also even increasing activity. And let's not forget that those are actually are denominated in foreign currency. Of course, although the naira is appreciating, but if you compare to where we were last year, there will still be some level of currency devaluation that will also help them. Then also the industry will actually even do well in terms of investment income, because there's no way you can talk about the insurance industry without looking at the performance of their investment portfolio. We also the bullish run that we are having on the stock exchange. It will help the industry, and also the returns on fixed income securities, right? You can see that with the true yield on government securities is getting to about 26%, right? And also the yield on bank deposits increasing. We see the industry will actually have positive returns on their investment portfolio.
Yeah, well, because the insurance stocks have also been catching my attention recently. We used to see it as penny stocks that didn't get any attention, and then suddenly we saw some interest, some cherry picking on those stocks, and we do hope that it is sustained, even though at this time this is the fixed income market that is getting a lot of attention.
Exactly. We hope so too, right? A lot of people are realizing that the insurance, there are some that even you can even still get value from their stock, from their shares also.
All right, thank you so much for your time. Head of Financial Institution with Augusto and Co. Ayokunle Olubumi. Enjoy the rest of your day.
Thank you. And you too. Thank you, Hini.
Let's take a break now. When we come back, we'll probably see a little bit of what has happened with those insurance stocks at intraday with Anita Edit, but that's after the break. Just stay with us. back to Watching Business Incorporated right here on Channels Television. We'll head to the markets now and see what the numbers are looking at intraday with Anita Edet. And Anita, it was a dramatic close of trade yesterday at the NGX. I don't know what happened, but I think it just begs to the fact that we need, do we call it real-time trading from the NGX reporting on their website and all of that? Because at the close of trade, a lot of people were confused as to what was the close, the numbers at the close of trade.
Yeah, that's why, Zini, because not only we, some other notable websites and market reporters, they all also took the numbers at about 100,000 points. But on the NGX's website, when it closed, it had fallen below the 100,000 points. You know, continuing that decline, which we've been seeing since last week, and that's no thanks to losses. By 49 losers.
Yeah, but at the close of trade, even though it closed below the 100,000, we see that intraday. That means today there's been a lot of cherry picking. I think from a lot on the banking counters. You know, we've seen investors attracted to the low prices there, and that's why we have back on 100,000 at intraday. At
intraday, yeah, and of course yesterday. The banking stocks have still they've been the one leading the decline that we see on the market.
So they should be the one leading the recovery.
Yeah, but
also.
Actually, it wasn't just the banks alone. It was the shares of Dangote Cement, which fell by about 4.4% at the close of yesterday. But when you go back to reporting the market real time, I think the owners should be on the stock exchange. Let's just call them out a little bit this time. About market reportage, because when you don't get the numbers right now, we have lots of viewers around the world watching Nigeria stock market. Nigeria is a very big market when you take a look at in terms of stock performance, in terms of trade, whatever trade, Nigeria is a market to be reckoned with. So these numbers, they're actual numbers which all countries. Investors,
we got this numbers I think about 30 minutes, 1 hour ago before we came on the show. But imagine we had live trading numbers, you know. I mean, if crypto can do it, I don't know why. You go to coinmarketcap.com and then you get live crypto numbers. You go to investing, you have some other websites that show other countries live trading numbers. It shouldn't be a difficult thing. A difficult thing for the NGX to do.
We just hope that maybe the NGX, while they're watching this, they're actually partners in progress for every...
Yes, they are partners, but we have to say things the way they are.
Every financial market journalist. So I think it's just about time, maybe just in 2024, it just decide to tinker with their mechanism for market reporting, real-time market reporting, that is. Right, so with that, Ini, let's just go straight deeper into the market for Africa, on the African continent. We were just mentioning about the Nigerian stock market. It's still in the red, but at least hanging by a thread back in the 100,000 points, which it had fallen below. And that's the first time since February 28, when the market fell below the 100,000 points. It had opened the year at about 100,000 plus. But then sometime yesterday at the close of Tuesday's trading session, it fell below the 100,000 points. But intraday today, midweek trading session, we're back at about this 100,039. The numbers are still changing because of the intraday trading activities going on there. So at the close of at the closing gong by 2:30, we will see how that number turns out. So now for the South African stock market, we see it in the green. Okay, so that was just a couple of seconds ago, a split second, we saw South African stock market in the green. And also the Egyptian stock exchange in the green, 1.19% at about 29,000, almost closing towards the 30,000 points for the Egyptian stock exchange, the EGX 30. Now for Kenya Stock Exchange in the red, 0.87% as a Tuesday. So that's it. That's a snapshot for the market. Now let's talk about the fixed income market. And this time we'll be looking at the proceeds, the outcome of that FGM bond auction, which we saw on Monday. So we'll be talking to Akpenwe Oputu, chief dealer at Lotus Bank, for more details about that, as well as some other instrument within the fixed income markets. Thank you for joining us, Akpenwe.
Thank you for having me on the show.
Okay, now this is the April FGN bond auction. Some time ago, we had the April savings bond auction, but this time is the federal government of Nigeria's bond auction, which is always drawing some attention. Now, can you give us details about this bond auction carried out earlier in the week?
Okay, so thank you. There was a bond auction on Monday, and we saw the DMO sell about 654 billion at that auction. So this actually mopped out liquidity. What was of interest is the rate at which the bond closed at, the 2034 especially, closed at 20%, and this is very good yield for investors. So we've seen a lot of investors looking at that and purchasing this federal government bond. Even the 2029, which is a 5-year bond, closing around 19.3%, actually good returns for investors. So we've seen that the federal government is looking at raising more long-term debt and long-term borrowings, and we can see that from the result of the auction.
Okay, that's that for the FGM bond auction. But this time, let's take a look at another bond, which is Sukuk. That's basically your market. Now, the second quarter, can you give us details if there's any about the Sukuk market? It's been a little bit quiet. We didn't see anything in the first quarter. So what about the second quarter for the Sukuk market?
We're yet to see the calendar issued by the DMO yet to see how much they intend to raise in terms of investment, constructions ongoing right now in this current administration. Last year, we know they did 350 billion, and the rate on the 2033 bond closed at 15.75%. Well, for this year, we expect to see a higher return for investors who are actually tilted towards this securities. So with the increase in MPR rates twice already, we expect to see this bond close as high as where the FGM bond is trading now. So probably looking at around 18 and 19% level on the Sukuk bond. So we just await the calendar from the DMO. So those of us who are trading actively with these securities can invest our funds.
Okay, now that takes us to my final question with you. The intraday for the fixed income markets. Yesterday, we saw some bullish sentiment for some of the instruments. Now, what do you expect for the close of midweek trading session for both the treasury bills, the bonds market, as well as the open markets operations markets?
There's actually the yields in the treasury bill space are actually good yields. For 20.5% on a 1-year paper is actually attractive. So we've seen a lot of investors move towards this treasury bills. And it's in the secondary market, we can see demand for the paper, the 1-year paper, trading as around 19.6% level. So even people are actually willing to take it even much around 19 levels. So it's actually good returns for investors. And this pressure, we can actually see it in the FX market. A lot of people are selling off their foreign currency to invest in local papers because the return is actually quite good. And we think that the strategy by the central bank to offer higher yields for investors has actually paid out. And we can see that at the rates where the FX market is at 1148, we still see it coming down. We saw some trades consummated around 1,050 naira to the dollar. So these are the results of investors looking to take higher return in fixed income securities.
So we thank you so much for that analysis. And I understand it's your birthday, so let's just wish you a happy birthday and a wonderful celebration as you add a new age.
Thank you very much. Thank you.
Well, that was Akpema Oputu, Chief Dealer at Lotus Bank with fixed income market analysis. Now, let's talk about the Middle Eastern market. It's all in the red, no thanks to particularly the United Arab Emirates, the Abu Dhabi, as well as the Dubai. We see the impact of the rain, the flood that occurred on Tuesday. That flood, in just a few hours, it had rained down more than a year's supply of rain on that country, and which it flooded major highways and as well as the international airport. For the Dubai's airport is being closed. We'll have a correspondent, Mayawa, to talk about that in other programs, which is non-business. But this time, let's look at the Abu Dhabi in the red, 0.10%, while the Dubai FM is 0.05% in the red at intraday. For the other markets that we're looking at, for the other markets, there's also in the red. All the major Middle Eastern markets that we track, they're still at intraday negative. So, but we will be looking out for how it closes midweek trading session, but that'll be sometime tomorrow where we'll be tracking the numbers. And then let's move over to the United States markets. Major averages there, they were in the green. And then, it's looking to snap about 3 days losing streak. The U.S. markets have been falling due to several factors. At some point, it's also coming on the back of some earnings results which had been released. Banking, the likes of Citigroup, the likes of Goldman Sachs, and so many other equities on both the Dow Jones Industrial Average, the S&P 500, as well as the Nasdaq index. So those averages, on Tuesday, we saw the S&P 500 slipping to by about 0.21%, while the Nasdaq had shed about 0.12%. Now, for more details about the U.S. markets closing for Tuesday, let's bring in our Washington correspondent, Maria Bird.
The U.S. stock market had a mixed day on Tuesday as the Dow Jones snapped a 6-day losing streak, closing 0.2% up, while both the S&P 500 and the Nasdaq had tough days. The Nasdaq closed at 0.1% down, and the S&P 500 closed at 0.2% down. It is clear that investors were watching to see what Chairman Powell released on Wednesday, as they were a bit disappointed to hear that we might not see any interest rate decreases anytime soon, as the inflation fight continues. Many are watching to see what the next days and weeks ahead will mean for the U.S. stock market, as it's still looking at the Middle East conflict having an impact on the U.S. economy, specifically showing that yield bonds are up more than 5%. This has created some concern for many investors, but the days and weeks ahead will give a better judgment as to how the U.S. stock market will fare in the third quarter.
Our Washington correspondent, Maria Bird, with the Wall Street numbers for Tuesday. Now, finally, let's go to Asia. Asia Pacific, most of the Asia Pacific, it was a mixed close for Wednesday. They're already hours ahead of Nigeria as well as some other countries, so about 8 hours. But this is the figure for the close of the day. The Nikkei has dropped below the 38,000 level. That's the first time since February. So it was down about 1.32% earlier today, Nigerian time. The South Korea's Kospi also in the red, 0.98%. Almost 1%, while the Hang Seng in the green at the close of today's trading session. So now the markets are also awaiting the trade data from Japan, as well as the trade data from Singapore, where we see the trade data they're expected to be released sometime later today on Wednesday. So, but for Shanghai was in the lead, was the major leader there, just about out of the 5 indexes that we track across the Asia Pacific. China's Shanghai Composite was in the green, 2.14%, quite a massive gain there, while we see the S&P ASX 200 of Australia in the red, 0.09%. That's it for the markets, snapshots that we've been giving, and maybe we'll be taking real-time numbers if we can get our hands on it.
Yes, if we get our hands on it. Thank you so much, Aniki. Now let's head to Berlin, where the European Union is looking to push back against what it calls assertive trade practices from China officials that are reportedly set to launch another round of investigations of Chinese products. And it's the latest battle in the long-swimming trade tension between the EU and China. On the other hand, remember that the Chancellor of Germany, the largest economy on that bloc, went to China over the weekend, just got back, I think, yesterday. And so how do we relate these two scenarios where the EU is looking to sanction China, and then we see German leader going to China to ask for more businesses and all of that. But let's have Cassandra now. Cassandra, can you help us understand these two areas that seem to be contradicting? Hi, Cassandra. Good afternoon. What else can you tell us about these two parts of the story?
Well, thanks for having me, Innie. And that's right. EU leaders are putting the final touches on something they're calling a competitiveness deal that's reportedly coming out this week. The document highlights in particular that the bloc is facing increasingly assertive policy measures by its rivals, pointing particularly to subsidies. Now, this idea that the European Union isn't competing on a level playing field with China was echoed by German Chancellor Olaf Scholz while he was in China this week. During his visit, Scholz pushed for China to treat foreign companies better, saying, quote, competition must be fair. But while he was pushing for fairer treatment, Scholz was also advocating specifically for German industry. He pressed the case for China to guarantee German firms equal market access, the protection of intellectual property, and a reliable legal system. So, stepping back, EU officials really feel that the game is rigged against European businesses. There have been several investigations of Chinese-made goods like electric vehicles, wind and solar parks, and even railway firms. The next inquiry to be launched, reportedly by the EU, is likely to be against China's procurement of medical devices. Now, this deluge of investigations is a sign that the EU is increasingly willing to assert itself against China, threatening restrictive trade measures that could result in tariffs, which could cut China off from European markets and could maybe even spark a trade war. Now, I know that's a lot of coulds, but the EU's competition chief has said that the bloc is catching on to what she calls the Chinese playbook, adding, quote, knowing that you have been played teaches you that you need to watch out.
Yeah, and there's also the conversation around the emissions, carbon dioxide emissions, and limiting green tech options and all of that. Tell us about the details of this.
Well, the area of clean tech is where the EU is fighting most fervently against cheap Chinese imports. Despite EU investments in the industry, China has come to dominate the market over the past decade, with their domestic industries buoyed by massive support from the state. For example, in the wind sector, companies are able to sell products about 20% cheaper than their European and US peers. So there are these two stances from the EU that could be at odds. The first is this EU goal to slash its carbon emissions by 55% this decade. The bloc is already off track there, by the way. The other piece is this so-called Net Zero Industry Act, which was put forward last year and requires that 40% of the EU's clean tech needs, that those needs be produced domestically. The aim there is to rival an enormous support package from the US, which was passed 2 years ago. So there are two concerns here. There are concerns about these two goals, whether it's possible to turn to greener tech as soon as possible and get tech made in the EU. These two goals could be at odds. And the EU competition chief, Margrethe Vestager, has warned that Europe's EVs and chip sector could go the way of the European solar panel. The European Union, after all, lost out on that industry, even though it invested heavily in the tech over a decade ago. Today, 9 out of every 10 solar panels are produced in China.
All right, Cassandra, just a minute now. I would like to inform our viewers who are watching us on our DSTV platform that we're heading to Ondo State, where Asheyori Youth Conference 2024. They're having Asheyori Youth Conference 2024 is holding at the St. Thomas Event Hall in Ondo, on Ondo Road in Akure, and they are going to be having that conversation. But that's for our DSTV platform, those who are viewing us through DSTV. For other platform, that's our domestic platform, as well as the UK platform, will continue with Business Incorporated. And certainly we'll continue with Cassandra. Thank you so much, Cassandra, for your patience. Now let's head to the market, Cassandra, and see what's happening there.
A bit of a mixed market here in Europe so far today. The Paris CAC 40 index rose 0.5%, and the Frankfurt DAX gained 0.1%. The London FTSE 100 opened flat following official annual inflation data. That news showed that inflation slowed slightly less than expected. That news seems to be weighing on market sentiment and dampening risk appetite. So while inflation does seem to be cooling, it's not cooling fast enough for some in Britain. Meanwhile, industrial metal miners gained 1.5%. Iron ore futures climbed to their highest level in more than 5 weeks. Shares of Rio Tinto were boosted as a result.
All right, Cassandra, thank you so much. UK inflation easing there, but not fast enough.
Thank you for having me.
All right, now let's move to the African continent, starting with South Africa, where the country is hosting the 2024 South Africa-China Jobs Fair. And we see there our correspondent, Innocent Semosa, has been filing in report and giving us update on that. Let's join him now as he tells us more about that event in South Africa.
In a bid to address the pressing challenge of unemployment in South Africa, some 77 plus Chinese businesses based in South Africa are offering locals about 6,000 jobs in the next 3 years.
I thank Chinese investing enterprises and strengths from both South Africa and China for their active participation and strong support. The warm-up has recorded important scenes from President Xi Jinping's visit to South Africa last August.
So this relationship is a very strong relationship. There are lessons that must be learned. China itself, you know, in its history, comes from a history of what used to be called backwaters at the time. But look at how far it has gone in growing its own economy, in building infrastructure, in having new industries. Those are the lessons that we have to learn, but learning is a two-way process.
I asked the minister in the presidency, Maropeni Ramakgopa, to find out whether or not these Chinese businesses comply with South Africa's labor laws. And this is what she had to say.
There have been, of course, and I know why you are asking that, there have been instances where there were not necessarily adherence to all the labor laws of South Africa, because if you know, companies that come here would come with their own cultures and their own understanding, and when they come here, then they don't do exactly what is it that we need. But what we have been able to do is that we are continuously engaging with the embassy, we are continuously engaging with the formation that deals with or that is housing all these companies.
We have the company values, and people is a very important asset, and it's one of our company value. So we're always caring for people, also including the environment. So that's why we're always thinking people is more important for the company, and we're always looking, the talent, especially support the local education, also the local employment.
Some unemployed young people say this is a step in the right direction.
There's nothing as painful as studying and then you don't get a job. So this initiative at least brings hope. There's hope for the future, especially for upcoming graduates, because at least there's something they will get.
It is a good initiative because for some youth, others I think they didn't come here for nothing. Others are going to be employed. I'm really sure, because I did civil engineering. I only saw 3 companies that are dealing with civil engineering.
Let's hope that this event won't just be a talk shop with empty timelines and no clear direction. From Pretoria, South Africa, Innocent Semosa, Channels Television News.
Certainly an empty timeline is not what we want to see. We head to Egypt now, where the central bank of that country is offering corridor-linked deposits for a duration of 35 days, amounting to 100 billion Egyptian pounds. And the total amount to be returned will be 105,500 billion pounds. And the deposit maturity date is for 22/5/2024, and that's the 22nd of May 2024. And the move is part of the linked deposit system that CBE regularly provides to control the money supply in the country. And it is one of the tools used in the open market to effectively manage liquidity levels and absorb excess funds to control inflation. From there to Kenya, where the shilling has suffered a loss. Looks like a Nigerian scenario here against the dollar in the first 2 days of trading week that began on April. Remember, the shilling has been on a surge since last week. There were slight ups and downs yesterday, April the 16th, and the shilling closed the market with 131.6 on Kenyan shillings yesterday. These changes have been reflected in the Forex market, with Forex Bureau in Nairobi exchanging the dollar for 133 today, April the 7th. Let's talk more about what's going on in Kenya now with Dr. Debisi Araba. Dr. Debisi Araba is a visiting research fellow, Imperial College London, but currently in Nairobi. Dr. Araba, good afternoon and thank you for your time.
Hi, Ini. It's a pleasure being here.
So you are in Kenya. You've been there for a bit. Tell us if there's been change. We've been hearing, the Kenyan shilling is surging, is adding value, and inflation is tapering and all of that. What is the feel generally as a resident over there in Nairobi? Would you say purchasing power and prices?
Yeah, Ini. Well, I would say the currency held steady at somewhere around 100 shillings to the dollar for a fair bit, and the fall, which is sort of the increase in the rate of depreciation, really kicked off around February 2020 at the onset of the global pandemic. It peaked in January this year at a value at I think 163 shillings to the dollar, and has come down. So even as you're reporting that the shilling has dropped even further, it's still about it's 20% less than it was in January this year. So maybe cause to celebrate. At least the currency appears to be stabilizing against the dollar. We've also seen in the near term, an announcement by the Kenya Power Corporation, KPLC, that there will be I think it's about a 14% reduction in the price we pay for power in Kenya. So at least I think, I can't speak for other sectors, but there will be that lag between the currency strengthening against the dollar and how we see a reduction in prices of goods and services in the country.
Yeah, so let's speak to a sector that you are more comfortable with, which is the agriculture sector and its contribution. We know that for Kenya, tea, is a major one for them. But I saw reports saying that tea companies have agreed to slow mechanization after Kenya protest. In Nigeria, we're looking for how to increase mechanization. Help us to understand the scenario.
Yeah, thanks, Ini. There's a bit of context and background to this. So first of all, tea is the biggest commodity that Kenya exports. It's worth the export value is over $1 billion a year to the country. It's about $1.2 billion to the Kenyan economy, followed by cut flowers and then coffee. Now, with the tea growers last year, there were reports of making the rounds of human rights issues in the tea plantations that supply the global tea companies that you are all familiar with: Tetley, PG Tips, Lipton, to name a few. But the farms or the farm plantations that supply these global brands with the tea leaves. Kenya is famous for the high quality of our tea here, and significant human rights abuses that warranted government intervention, significant investigations, etc. So this bleeds into the conversation around the introduction of mechanization that threatens to reduce the number of jobs or manual labor available on these plantations. So there's been an agreement to temporarily halt the introduction of the mechanization equipment to secure the jobs, while the negotiations between the laborers, the farmers, and the plantation owners continue. So it's less of a technology debate. It's more about jobs that bleeds into the human rights case from last year. So we will see. I mean, just as the world advances in all spheres, we will see the introduction of modern technologies introduced into the tea value chains in Kenya. The question is, what will the government of Kenya do to secure good quality, dignified jobs for people in rural areas and people who potentially could be left out of work as a result of the introduction of the mechanization equipment.
Yeah, well, I guess every country on the continent with its own customized challenge to handle. But thank you so much, Dr. Debisi Araba, for your time this afternoon.
My pleasure, Amy. Thank you.
All right, so yesterday we saw all shades of red on the crypto screen. I wonder what color we'll see today, but Ladi comes in, and I think he's trying to avoid showing us that
all
color.
the shades, right?
But yes,
it's still red actually.
I know. That's why you're trying to put this up. We're not moved. We're not looking at halving. We want the reds.
But you know, all of you have been waiting for this prestigious halving day, and it's just 2 days away. 369 blocks until the halving, about 9.72 minutes approximate block time before we get this almighty halving, which means that
I can't wait. We've been talking about this for months.
Yeah, the miners of Bitcoin will see their rewards cut in half, and we'll see how that impacts the Bitcoin network going forward. But let's talk to Solomon Amunde now to talk about how to trade around this whole halving process. Now, great to have you, Solomon.
Yeah, good afternoon, Ladi. Good afternoon.
Fantastic. So it's 2 days, about 2 days to go before we get the Bitcoin halving for 2024. Talk to me about the best strategy to trade post-halving.
Okay, so the best strategy now is those that are looking at investing into Bitcoins. By now, they should have started DCAing into the assets in a desired formula. And the aim of that is so that they can begin to take some position in terms of their Bitcoin investments and holding. Because personally, I still believe Bitcoin will still do further corrections. So it's best for people to begin to DCA right now that we're around $60,000.
And still, another news coming from the U.S. at this time. Don't know how this is going to impact, Bitcoin price, going forward. They're seeing a bill to ban algorithmic stable coins in the U.S. How are you seeing this move?
Yeah, I think their concerns are actually very valid because basically the crash of 2022 with Terra Luna was basically because of the whole algorithmic stablecoin, which brought the crypto market to its knees. So it's only fair that they should try and regulate what is really happening, even if those in the decentralized ecosystem wouldn't really agree. But still, algorithmic stablecoins are like kind of like an experiment currently, and they are not backed one-to-one by the US dollar. And right now that we're having institutional investors coming into the market with billions of dollars, it's only wise to make sure at least the market is safe and it's okay for everyone to invest.
All right, I guess it'd be safe to see how markets actually react when this law, is actually passed. But, talk to me now. Let's go back to the halving. Once it hits, once we get to that 2 days and the halving becomes live, what do you think happens to Bitcoin price?
I think short term, after the halving, we will still continue correcting, most likely down to almost $40,000 or slightly below. Then afterwards, say 2-3 months after the halving, we should start seeing Bitcoin regaining its momentum towards the upside and would obviously make new all-time highs. So after the halving, we should be looking at hitting over $80,000. Now, this is at least 5-6 months after the halving, not immediately after the halving.
All right, definitely looking forward to that. Thank you so much, Solomon Amunde, financial market analyst.
Thank you very much, Ladi.
All right, so Ini, I'm going to get your number now. Post-halving, what number do you see for Bitcoin?
100,000?
Wow. That's quite optimistic.
I'm very optimistic.
Wow. That's
very.
All right. 100K.
No, but I think Solomon also wants us not to expect it very soon.
Right.
About 6 months afterwards. Yeah. So let's not jump into it.
Yeah, we know how greedy investors can actually get to.
I know. Thank you, Ladi.
Thank you.
Well, that's it on the program today. Thank you so much for being a part of another episode of Business Incorporated. We'll do another one tomorrow, but you can always repeat this experience when you go to our YouTube channel. Ladi Williams will be back 10 a.m. tomorrow for Business Morning. I'll see you at 1 p.m. I'm Ini John McCoy. Enjoy the rest of the day.